Hey everyone, welcome back to Corporate Decoder. Today, Cogent Communications Holdings Incorporated, CCOI, just filed a Form 8K announcing a major asset sale, and I am seeing a strategic move that could reshape their business. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is selling a significant chunk of its data center business, and the price tag gives us a lot to chew on. Alright, let's dive into this report from Cogent Communications Holdings Incorporated. This filing tells us about a big deal they've made to sell off part of their operations. It looks like they're streamlining their business. So the main event here is that Cogent Fiber, which is a subsidiary of Cogent Communications, has entered into an agreement to sell some of its assets. This is a pretty significant move for a company like Cogent, which is in the telecommunications and data center space. They are selling off 10 data center facilities. Think of these as the physical buildings where a lot of the internet's backbone lives, where companies store their servers and crucial data. Now, let's talk about the money. They are selling these 10 data center facilities for a cool $225 million. And importantly, this is all cash. That is a really significant amount of money for a company of Cogent's size, which has a market cap around $889 million. Selling a chunk of assets for such a large sum suggests a strategic shift. They are likely looking to either refocus their resources, pay down debt, or invest in other areas of their business that they see as having more growth potential. It is not just the buildings themselves they're selling. The deal includes the personal property associated with these facilities, which could be things like generators, cooling systems, and other essential equipment. Plus, they're also transferring customer contracts. This means the buyers are essentially taking over existing relationships and revenue streams tied to these data centers. This makes the deal more attractive to the buyer because they are getting a ready-made business, not just empty buildings. Now, there is a small but important detail here. Cogent Communications Holdings itself is guaranteeing some of the obligations of its subsidiary, Cogent Fiber. Under this agreement, this means if Cogent Fiber were to fail to meet certain commitments laid out in the purchase agreement, Cogent Communications Holdings would step in. It is a common practice in these types of deals to ensure the seller's obligations are met, but it does tie the parent company's financial health a bit more directly to the success of this specific transaction. As with any big deal, there are conditions that need to be met before this sale is final. This includes getting approval under the Hart-Scott-Rodino Antitrust Improvements Act. This is basically a government check to make sure the sale doesn't create a monopoly or harm competition. It is a standard hurdle for large mergers and acquisitions. And for Cogent's sale of data centers, it makes sense that it would be a requirement. They've also set some timelines. If the deal doesn't go through by the 18th of November 2026, either side can walk away. The expected closing date is around the 12th of June 2026, or whenever they get that antitrust approval. Whichever comes later, this gives them a clear time frame for completion. This filing confirms what was announced in a press release just a few days ago. So this is essentially the official regulatory notification of that sale agreement. The press release highlighted the key details we just discussed, the sale of 10 data centers for $225 million in cash. This is a clear signal that Cogent is actively managing its asset portfolio. Looking at the exhibits, we see they've filed the purchase and sale agreement itself as Exhibit 10.1. This is where all the nitty-gritty legal details of the deal are laid out. They've also included the press release we just mentioned as Exhibit 99.1. Now, what does this all mean for Cogent Communications Holdings? Well, selling off data centers is a pretty significant strategic decision. Cogent is primarily known as an internet backbone provider, offering high-speed internet services. Data centers are a related but somewhat different business. By selling these facilities, Cogent seems to be sharpening its focus on its core internet services. This could mean they believe their future growth lies more in expanding their network and customer base for their internet offerings, rather than in owning and operating data center real estate. If we look at the wider context, companies are increasingly looking to specialize. Some companies are indeed spinning off or selling non-core assets to become more agile and efficient. For example, we've seen similar moves in the real estate investment trust sector where companies divest properties to concentrate on specific markets or property types. In Cogent's case, it is about shedding physical infrastructure to perhaps invest more heavily in their fiber optic network, which is their main moneymaker. This $225 million cash injection is a substantial amount. It could be used to pay down debt, which we see some analysts have flagged as a potential concern for Cogent in the past. It could also be used for acquisitions in their core telecom business, or for further investment in their fiber network infrastructure. Given the company's market cap, this cash infusion is significant enough to really move the needle. What is the risk here? Well, the primary risk is that by selling off these data centers, they might be giving up a steady, predictable revenue stream. Data centers often operate on long-term leases with stable tenants. If their core internet services business faces unexpected headwinds or intense competition, that cash might be spent quickly and they'll have lost that reliable income source. Also, as we mentioned, the parent company guaranteed some obligations, so there is a slight residual risk tied to the transaction even after the sale. On the flip side, the opportunity is clear, a more focused company. If they can invest this cash wisely into their core business, they could see enhanced growth and profitability. This move could make them a more attractive investment for those who believe in their internet backbone strategy. Looking at their stock performance and analyst sentiment, there has been some buzz about Cogent being potentially undervalued. So this strategic move might be aimed at unlocking that value. Ultimately, this sale of data centers for $225 million in cash is a strong signal that Cogent Communications Holdings is making a decisive pivot towards its core internet service offerings. It is a move to streamline operations and focus on what they believe will drive future growth. The real test will be how effectively they deploy that capital and how their core business performs in the coming years. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.